Welcome back to the Crypto Trends Podcast, where we cover all things cryptocurrency, blockchain, Web 3.0, and AI. I'm Robert Croak, and I'm joined by my co-host, Armando Pantoja. Both of us and our amazing team are excited to bring you the best information, guidance, and strategies each and every Wednesday. So follow along and always remember to take notes and take action. So let's get into talking point number one. What's up with Bitcoin and Ethereum's recent declines? I think this whole episode is going to be about the negatives in the market, what is happening, and how we can overcome and not have those knee-jerk reactions. So let's get started with Ethereum has faced a 9% decline over the past week, while experiencing a significant reduction in trading volume. And, markets really are suggesting that this could set the stage for a rebound, but we shall see. Number two, Bitcoin lost over 8% in value last week, dipping below $54,000. And this suggests Bitcoin is still reacting to market forces, either in a downward correction or experience a pullback, but not settling into clear consolidation patterns. And then lastly, Bitcoin ETFs in the U.S. saw net outflows of $1.2 billion over the past 8 days, indicating cautious investor sentiment amid recent price volatility. I know that was a mouthful, so Armando, let's go through it. Let's break it down. What does all of this mean for our listeners? Should they be scared? Should they be concerned? We're seeing a lot of the fake gurus and the hoaxsters out there saying that Bitcoin is over, crypto's over, blockchain is dead, and that there is no bull market coming. And I just think it's pretty ridiculous, because those are the same people, as soon as the bull market is in full swing, they'll take credit for everything and tell us all that they called it and they timed the market perfectly. Break it down a little bit for everyone, because there is a lot of bad news right now. And we want to just clarify that as so many people look at these retractions and drawdowns in this news as bad news, we look at it as opportunity. Because if you pull back the curtain a little bit and you really look at what the big banks and the rich are doing and the governments are doing, it's completely opposite of what the retail markets are doing.
And it's every day in the news you see what the rich, the banks, and the elite are doing. They're buying it up and controlling the market. In this point in time, along the Bitcoin, halving cycle into the bull market, this was expected. I've been in crypto a long time, and every single time after the halving, we get to this point where there's almost disillusion. People say, "Oh, it's over. That didn't work this time." Then all of a sudden, 4 to 6 months after the halving, just like we said for the last year, we see that rapid increase. Now, this year is different. It's because we're in a volatile election, right? Is that there's no clear winner, even though some prediction markets have predicted who's going to win or who's not going to win, but it's almost evenly divided who's going to win this election, so we don't know. But we have seen Ethereum drop 9% over the last week, right? And we saw Bitcoin take some heavy losses as well, as that panic started to wash over the market. So in this trading environment, I see opportunities, right? Is that whenever there's a drop, and we've been talking about this for a while, altcoins like Ethereum take on bigger losses. And then when it recovers, altcoins like Ethereum recover a lot stronger. There's your opportunity right there, is that when these crashes happen, dollar cost average into some altcoins, and that's how you could see greater gains than you could by dollar cost averaging into Bitcoin, right? There's a little bit more risk, but there's a lot more reward as well. So it doesn't worry me. It's all this gloom and doom. So there's also reduced volume gives short sellers and bearish investors an opportunity to almost attack the market. And that's what we're seeing too, is that because there's less volume, less people actively participating in the market, they know that they could come in short or do whatever, derivatives or options, whatever, and they can push the market down and they can profit that way. So we're seeing some of that in the market too. The dip seems concerning at first, but remember, Bitcoin has over time has steadily shown increases. Even over this year, like last year, around this time, we were at like 25. Mm-hmm. So it's almost up 100% since last year. So like you always say, when in doubt, zoom out, look at the whole market, and you'll realize where we are.
Yeah, I just wish we could get everyone listening and following along to go for a bike ride, go to the gym, eat some ice cream, and relax. Because at the end of the day, we're going through the same thing in the stock market where everyone's, oh, AI is dead, NVIDIA is done, Palantir is done, all of this. But then if you zoom out a year, the gains are 100%, 200%, 250%. And it just really is tough because, our job as educators is to just try and present each and every one of you the best information we can to be able to help people understand where the market's going, why are these things happening, and what to do next. And I think that's the important part about all of this, is getting people to stay calm, really understand the information, and look where the adoption is. Look where the big banks, look where the rich and the elite are putting their money, because they're not wrong. And we talk about this all the time. The BlackRocks of the world and, the Fidelities, they move markets, and they're putting their money in. They're betting the farm on all of this, and it just doesn't make sense for us to be so concerned. So let's go to our next talking point, and that is Ethereum's dip and the rise of prediction markets, because I think it's going to be a wild ride. And the prediction markets, I don't know if many of you follow Polymarket, but if you don't, you should definitely be checking it out. And they are predicting that the VP, Kamala Harris, will win the presidential debate. Yet Trump still has a small edge in the betting markets, and over $850 million in bets have been placed on the line. And right now, Trump has a small edge there that they believe he will still win the presidency. So to talk about this a little bit, let's get into Ethereum's trading volume has recently dropped as well, and how that is relative to the poly markets and these betting markets. And this really sparks a concerns over a deeper drop. And some believe the dip in Ethereum's volume and price is temporary, and definitely, like we do, seeing it as a buying opportunity. So let's go through Ethereum, talk about Polymarket and what it means to the overall markets, because I think it's important for everyone watching to understand that Polymarket and others like it are very good at predicting, and that information is very important to all of us when we're trying to figure out what is the overall market sentiment. So I think it's very important. So let's break that down.
Yeah, so platforms like Polymarket work on the principle that when people, and it's basically what our economics is based on, is that people, when they have their own money at stake, they're likely to make better decisions, right? Or they're able to remove emotion, hopefully, and bet on who they actually think is going to win. That's why prediction markets like Polymarket work so well in predicting events, because people, they may go around and say they're for one candidate or the other, but when it's time to put their money on the line, all of a sudden they start looking at data, they start looking at, rationality.
Yep.
Then they actually put their money on who they really feel is going to win. So that's why prediction markets work so well in producing that data that they can then use in systems, and election campaigns can use it. So there's a lot of things you could do with that data. But people probably listen to all this and say, why are you mentioning Ethereum with Polymarket? Polymarket runs on an ERC20 token. It drives network activity. It controls that market, and that's the way that market is built, is based on an ERC20 token. The ERC20 token is built on Ethereum. Now, if we go back a little farther, 2015, when Ethereum was created, before that, all cryptos were just a way that we can transfer value. So if I owed you some money, I send you some Bitcoin. You owe me some money, you send me some Litecoin. That's how it was. Ethereum changed the entire game. They created a way for you to create smart contracts, to program on the blockchain, but they also created something else called an ERC20 token.
Yep.
That allowed people that, before that, you had to create your whole blockchain and all the software requirements and hardware requirements that went with it in order for us to have a blockchain and a cryptocurrency. Ethereum said, look, we're going to build the base. You can build any coin you want on top of it, but we only want one thing, is that when you transfer that coin, we want you to pay gas to our blockchain.
Yep.
All right, so that was an explosion of ERC20 tokens, including Polymarket. And what this is important to Ethereum is because what we said is that when we transfer those tokens, we have to pay in Ethereum. So that draws the demand of Ethereum upwards. That makes people need Ethereum more. So every time one of these markets or coins or smart contracts or DAOs get created, there's another step towards increased demand for Ethereum. So the power of prediction markets, especially with Polymarket, and the fact that they use ERC20 as the standard in which they transfer their tokens leads to, I think, that Ethereum is going to be the #1 cryptocurrency in the world. As new coins like Polymarket, as new smart contracts, new DAOs get created, that demand for Ethereum, because you have to pay in gas, goes up. And over time, it's going to make Ethereum the #1 cryptocurrency in the world by market cap.
I think that's a great takeaway, and I want to add just a little bit more to it. And that is, for all of you that are out there, the way to look at it is, even if you're not a gambler, which I hope you're not, and you're not betting on things like this, Polymarket is a great place to get information. That's the way I look at it. You're always asking us in the DMs and questions on lives, where do we get all of our information? How do we stay ahead of the curve? And it's places like Polymarket. When you're watching the betting strategies, you're seeing where the markets are leaning. It's really helpful to be able to understand, because markets like Polymarket are a really great predictor of future outcomes. And that is why I like it. And all of you should be watching it as well, even though you're not betting on things, because the data that comes from these markets often reflects the public sentiment and can offer valuable insights. And so that is one of the key things here. And the increasing legitimacy of prediction markets will definitely lead to more innovative forms of prediction and betting in other areas. So just always look at this as another form of tool to help you make educated decisions in the market, so you know what to do. So let's go on to a fun topic that is a little more lighthearted, and that is, why are meme coins like Shiba Inu exploding in popularity right now when the rest of the market is in this bearish sentiment? And I think one of the reasons is, and it's not a good one, is because we see so many people when they get into crypto, they are gamblers and they are not investors. And the gamblers always seem to go towards the meme coins because they believe they're going to be the one that picks the 1000x and they're going to turn $100 into $1 million, yada, yada, yada. So that is the bad side of meme coins. But the good side of meme coins is that new investors can really push these coins to new heights, be part of community-driven meme coins, which is really great. But keep in mind, the meme coins, if you're not in the beginning of the run, you're going to end up buying at the top and selling at the bottom. I don't suggest it. I look at it as a lot of hype and a lot of risk, and we're here trying to educate all of you on how to be good investors, how to be able to deduce the sound information to help you in your investing journey. And so just be careful when you're investing in the hype and you don't understand what you're investing in and why that coin or project may do well in the future. So let's break it down a little bit for the listeners.
Yeah, meme coins don't make sense traditionally at all. And I think a lot of them will eventually go to zero after the hype of Bitcoin and all the hula rah, whatever is all over. Meme coins will go to the wayside. There's some opportunity on some. If you want to be a day trader, like I don't do that anymore. I did it, a while back. I don't day trade actively like I used to. There is some, but long-term investing, I don't think it may be 2 or 3 that may change into something else. So for example, like Shiba, last week we talked about on the episode previous to this, is that they started a DAO, which allows their users to invest in different projects that they want to, profit-making endeavors that they want to invest in. Now, this is converted, people can argue, Shiba into, away from a meme coin into a real traditional coin with utility. Mm-hmm. Right, but that was one coin, like you said, out of 1,000.
Right.
There's all these meme coins out there, Pepe and all these. I don't believe in any of those because there is no utility. And meme coins only hold value as long as the people hold the line.
Yep.
And we know human psychology.
Like the U.S. dollar.
That's a good point. We know how people are. People, like with GameStop, I remember during that whole saga, everybody hold the line, nobody sell. We know people are selfish.
Yep.
So as soon as it starts dropping, that line will fall and the values will drop. And that's the same thing that will happen to these meme coins with enough time. So we have to move away from gambling and move towards investing. Hype around these meme coins is undeniable, but it presents incredible risk for people who aren't prepared to take on those losses.
Yeah, I think the way to look at meme coins is this. The people that are in the know make all the money, and the people that are late to the news get wrecked. And that's why it's gambling. If you're going to spend your time during the day and you're going to be in the discords and you're going to be studying the drops and you're going to be involved in the airdrops, I think one of the best ways to make money in cryptocurrency right now is to become a professional airdrop hunter. Super simple. Go out, study the airdrops, get involved in the discords, get involved in the communities, and get in on all these airdrops. It's some of the easiest money people can make. But if you're not, by the time you hear about a meme coin on an Instagram post because they paid somebody to talk about it, it's too late. People, if you look at the chart and you see a big hockey stick up and you're going to buy it up here, don't do it because you're going to get wrecked. And that is gambling. And that is why I just don't like to talk about it too much. On the lives now, everyone asks me for predictions and this and that. And I'm like, I am not predicting anything. I am here to educate you on how to do these things and how to learn from my 35 years of experience as an educator and as an investor, and not teaching people how to gamble. So I think it's really important because in meme coins, speculations are running high and new investors are always hoping to jump in, hit that big winner, and YOLO their money. And it just doesn't work 90% of the time. And that's why I don't like to talk about it. You know, if it's a meme coin that's very community driven, like Floki, that's okay because you might be able to really ride the wave of some of these coins like Shiba Inu and Floki that are turning the corner from meme coin to being an actual real use case product. So that I'm okay with, but just be careful because at the end of the day, you just really have to define who you are. Are you a gambler? Are you a speculator, or are you an investor? Figure out which one of those you are, and from there, then you can figure out your strategy based on your risk tolerance.
I just want to add one more thing. Great points. I just want to add one more thing before we move on to the next point. You can go to Fiverr.com right now. Spend $50. You have a meme coin before lunch. And that's, you have to understand how fast it is and easy it is to create a meme coin. The ERC20 token has allowed people to instantly create tokens overnight and then start pushing those and selling dreams to people and then cashing out before those people are able to cash out. And that's how they make their money. So be very careful with meme coins, emails, your friends telling you about these weird coins that do all of this, because it's so easy to make them now that there's going to be a cash grab in this next bull cycle.
Yeah, it's interesting. I sit in on these calls where people tell me they're getting pitched on this next big meme coin project or ICO, and it's always hilarious because the founders never want me on the calls because I just look them in the eye and say, what is this product going to do? What's the use case? How much money do you have to market it? And what is the problem you're solving? And they can never answer that question because they're not solving anything. They want to do a cash grab.
But they can't say that.
That's right. They
so
can't.
They start stumbling and
That's
stuff.
right. Right. That's why they don't want me on those calls. So let's get on to the next one. And this one's pretty important. And I think this is a very bullish sentiment. And that is miners are increasing hash rate despite Bitcoin's price drop. And so as the title suggests, Bitcoin mining hash rate has reached a new all-time high despite bearish market conditions. And with the increasing hash rate, this indicates growing network strength and miner confidence. So let's go through these points, talk a little bit about what the mining hash rate means, why this is bullish, and talk the listeners through this exciting news, because we talked about this after the halving, that we felt a lot of the weaker miners would go by the wayside, which they have, and then the stronger mining companies have built, the CleanSparks of the world and the Maras and the Riots and stuff like that. So let's talk about what this means to the market as a positive sentiment, because there's so much negative news, and this is a really good one.
Yeah, so having, from an investor or retail perspective, we see the halving as something positive. We say Bitcoin, the supply, new supply is going to be cut in half, therefore increasing the price of Bitcoin over 6, 7, 8 months or whatever. So we get excited. But you got to remember, miners are affected greatly sometimes, right?
Yes.
Is that what the halving also does, it washes out inefficient miners. So from the day before the halving to the day after, you're making half as much money.
Yep.
So a lot of people can't make it. If they have older older machines, or maybe their electricity was too expensive, or they weren't efficient, they fall away, right?
Yep.
So what happens over those 6 months, the better companies like CleanSpark, like Marin Riot, absorb that hash rate into a more efficient operation and move forward. And then they have extra money to spend on more computing power, which increases the hash rate. Now, the hash rate is the total computation power of the entire Bitcoin network. Now, like we all know, anybody can be a node on the Bitcoin network. All you have to do is plug up a computer, you run some software, now you're mining Bitcoin. But because your computer is so slow, it won't be able to compete with the other ones out there. So by on-chain data, we can see that computing power, the total computing power, is highest than it's ever been in history, which tells us that there's more people out there mining Bitcoin, there's more computation power out there, better processors, and it also tells us that these miners expect Bitcoin's price to go up, because if they didn't expect it to go up, they wouldn't be investing all this money into increasing their capabilities in their operations. So with JP Morgan, with BlackRock, with this on-chain data that we're seeing with the hash rate increasing, these are all signs that point to a bull run coming. It's exactly as we predicted. We actually talked about this on the episode. We say that it would cut after the halving, weaker miners would go to the wayside, the bigger miners would absorb it, and the hash rate would go up. We said this. So that's why I'm saying all of these things are right on target for the bull run starting to take effect the last quarter of this year.
Yeah, I agree, and it's a great point. And even when the market seems to be in decline, the increasing hash rate is a clear indicator of growing network strength and miner confidence. And like you said, they wouldn't be, the biggest companies and all of these investment firms would not be investing hundreds of millions of dollars into the crypto and blockchain space if they weren't really sure of the outcome. And that's why we just have to be careful of falling victim to any ups and downs in the market or manipulation in the market, because we're going to see a lot of it, especially through the upcoming election. And so this continuous rise in hash rate shows miners are not shying away despite lower Bitcoin prices, because they know what the future holds for Bitcoin. And so halvings often lead to bullish market sentiment, and if history repeats itself, we should be just weeks or months away from seeing the markets turn around and really seeing a good bull market coming forward. But right now, there's just a lot of manipulation and a lot of uneasiness in the market, especially with retail investors.
Yeah, other than just increasing the computation power, it also increases the health and the security of the network.
Yep.
We have more people, more computation power securing all the Bitcoin transactions, so it's harder to crack, harder to break, harder to take control. It's more decentralized, more people out there mining Bitcoin, so that's always a positive sign with a decentralized network. So all these things are positive, and I think that it's a great indicator of what's coming with cryptocurrency in general.
I agree. So let's go on to our last talking point, and this one is a positive one. A lot of the news is saying that Bitcoin could hit $90,000 a piece by year end if Trump becomes president. So we'd like to do a poll and hear from all of you and your thoughts. So leave us a comment on who you think would be better for Bitcoin and the crypto markets, Kamala Harris or Donald Trump. We'd love to hear your thoughts on this to help us understand what you're thinking is the next best thing in this presidential election for the crypto markets. So Armando, let's talk about it. We're seeing all the headlines. I don't know if it makes a huge difference if Trump wins or if Kamala Harris wins. Right now, the consumer sentiment is that Trump is more pro-crypto and that we will see better overall markets if Trump were to win. I don't care who wins personally, because we will always have the workaround of how to thrive in any market. But what are your thoughts on this as far as the price action of Bitcoin and all of these predictions out there we're seeing in the news?
Yeah, I do believe that if Trump wins, we'll see Bitcoin rapidly go to around 100,000. I do think that. A lot of analysts out there are saying, if Harris gets in there, it's going down to 30. I don't agree with that. I think the biggest problem right now that's hanging over all of the markets, including stocks, crypto, and everything, is the uncertainty. Yep. Nobody knows what's going to happen. So it causes people to be just pull out of the market and just wait, paralyzed by uncertainty.
Yep.
And I think that's what's happening right now. The volumes are lower because of that. People aren't investing into the market like they normally do because of that. They don't know which way to go. So I do think that Trump, because he's been so outspoken about crypto will obviously help people will see that as a positive sign for Bitcoin, causing new investment. Because all those people that are on the sidelines now with that money are going to put it into Bitcoin, of course. But if Harris gets elected, I don't think it'll be a deep drop. I actually think it will still go up. Maybe not as much, but I think that uncertainty will be going, unless she does something like very against crypto, which she hasn't been talking about it much anyway. So if she just doesn't say anything, I think that it will still see an increase in crypto. I think either way will be okay. But I just think that Trump would obviously be more positive. Now, this is not a political endorsement or nothing. We got to say that because people think that it's just talking about somebody.
This is two guys on the internet voicing their opinions based on the news and all of the research we do every week.
It's just looking at the data, looking at the prediction markets, looking at data that's coming out. That's all it is, because that's what we do. We can't go by emotions. We have to go by data. That's how we make money. So, like I said, I just think that Trump will be a lot more positive. Not saying he's a better candidate, but just for crypto. He spoke at the Bitcoin conference. He's been talking about it for months. He has several crypto projects. Of course, he's going to be better for cryptocurrency, and I could see it going to 100 soon after he's elected.
I think the number one takeaway from that point is getting consumer sentiment to understand where the markets are. Because right now you said that there's a lot of unrest in the markets because people don't know what to do. And what happens is, like you said, is analysis paralysis sets in. They get out of everything. They sit in cash. They're not sure what to do. And that's okay because everyone has a different risk tolerance. Remember, personal finance is personal and everyone has a different strategy. You can learn all you want, but you have to go with your gut of what makes sense for you. And I think it's important for everyone to understand there is a lot of uncertainty in the markets right now. We don't know what's going to happen on September 18th with the Fed cutting rates. We don't know what that's going to do. Are we going to go into a soft landing? Are the rates going to be higher cuts? Is it going to put us into further recessionary tails? We don't know. All we can do is stay abreast on top of all of the consumer sentiment, the news, and what is happening throughout the Fed and the government and the election, and try to share with you our thoughts of what the best information for you is so you can make educated decisions on your future in finance. So I think this was a great episode. I love tackling the hard subjects, and I want to thank each and every one of you for listening and following along. You can find us on Instagram at Crypto Trends Podcast and on Spotify, Apple, and YouTube. And we are so excited to keep moving forward, keeping you all involved and up to date on everything cryptocurrency, Web 3.0, AI, and all of the topics that we cover. And if you like the information and you believe the value that we bring, please share the podcast with a friend. Give us that 5-star review, and we'll see you next week.